Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is the Kickstart video. On the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. Today's date is August 5th, 2024. We're getting sharp moves, of course, in the stock market today. The Nikkei fell by minus 12.4%, worst since 1987. We're seeing the Nasdaq index down around 5.57% in pre-market trading here. Buckle up, folks. It's going to be a wild one. So be aware, be prepared in this video. However, I'm going to focus on the currencies right at the moment. I'll be doing other videos on other commodities and other things like the stock market and maybe U.S. interest rates as well. Take a look at those later on today. But this is going to be focused around the euro. I'm going to try to keep things as clean and crisp as possible without getting too long-winded. So let's get started. Let's look at the 4-hour chart here, and this area right here was a level that I had earmarked going back in time to this area right here. Why? Because the market initially found resistance against this area right through here, and then was able to break through that level, extending all the way up to 111.38 in 2023. The high price for 2024, by the way, is right here at 110.64. Just keep that in mind, because it's going to be another target level going forward. But after we broke to the upside, we did move back below this area right through here, and then we came back up and used these levels right through here, which were lower than these levels here, forming a early selling opportunity against those levels. And you can see it sent the price to the downside. It wasn't until today that the price moved back into the swing area right through here. That area, by the way, comes between around 109.98, so right near the 110 level, and 110.16, so only a 16 pip trading range where traders had the opportunity to lean against that level. And so far they have. The price moved up to around the 109.08 level and then rotated to the downside. We're currently at 109.91, so below the 109.98 low of this swing area. Guess what, traders, if you want to sell because you think this is overbought, this is the area to sell, and that's what they've done so far. What the hope is that the sellers here would likely be putting a stop up here on a break of the 110.16 level, and that would not be a good sign for the sellers for it to break above this swing area. What they are hoping for is to move up perhaps below this level, or this level right here. I would think that this level would be a pretty hard level to get through. So if we do head on down toward the 109.47, I'd look to see buyers against that level with stops on a break below that level. But there is that possibility that we do head on down toward that level. At least that's what these sellers are hoping for. These sellers are risking this amount to potentially make this amount on the trade, with targets at this level and this level to get to and through, to show that they're in the right direction and things are working their way. Another thing that they could look at, sellers at this area up through here, is the 100 bar moving average on the 5-minute chart. Now the price did move below both the 100 and 200 during this period right through here, whether that's a late Asian or early European session, I don't know, but the price did move below those levels, increasing the bearish bias. You can see the price sellers tried to lean against that level, but then we had this break to the upside, and it was off to the races here. On this corrective move, the price did find support buyers against the 100 bar moving average before moving to the upside as well. So imagine this moving higher, this moving average, and that level, if it were to be broken, that would give traders a signal that perhaps the buying is over, and it may also be a target for those sellers against the 110.16 level on the top side. They may be looking to buy at 109.45-ish type level or higher as that price moves higher over time. Now let's take a look at the dollar versus yen, and I'm going to put it on the 4-hour chart as well for this currency pair to start things off. And in the weekend video, I talked about the price was trading near or closing near this swing area through here, and I spoke that if the price were to move below this level, you can see the number of different times the market either found support or resistance through here. Pretty clear, and it's pretty good, decent level. So what happened is the price moved down to that level on Friday, and trading here today, we started to rotate back to the break below that level. And at the time, I think the video I said we could go all the way down to this low price right through here, and indeed we've done a pretty good job of trying to get toward that level. We have seen a bounce against this level, 141.61. The level more or less corresponds with this low and this low. I drew that line a while ago, probably because of these two levels. This level force the price to the upside, and then correction and force the price to the upside right here. So you can see the importance of it. Admittedly, we moved below it through here, making our low price. That is another target on the downside at 140.24. So be aware of those levels: 141.61, 140.24 on the downside for the dollar versus yen. Now, what about the upside? Well, if I go back to that 5-minute chart here and do the same analysis that I did on the euro versus US dollar. In this case, there's lots of stuff here against the 100 and 200, which keeps the sellers in control. We came up to the 100 here, we came up to the 100 here, we came up to the 100 here and here, and currently right now we're trying to break back above that 100 bar moving average at 142.56. Now, I'm not saying that this is the this is the bottom, this is the end of it all, but we do have things like this floor here forming near the 141.75 level. If we can get above the 100 bar moving average, the hope is that the bottom is in against this floor, and we start to see a rotation to the upside. And then we'll start to look toward the 200 bar moving average up here at 144 even and moving lower, of course. That's the hope, okay? And it's a pretty decent move from the 100 to the 200 through here, but there'll be another target would be, let's say this high right here, 143.06, to get to and through. They give more confidence to the upside. But be sure to know that if the price cannot get above that 100 with any sort of momentum, let's say it moves above and then rotates back to the downside, I wouldn't mess around with it. Trends are fast directional, tend to go further than what traders think. And so that is a definition of a market. Anything that fails above a technical level like this that's been holding for a while is not a good sign. So look for the price then to move below our low price right here and extend further to the downside in the dollar versus yen. So I would pay attention to this. Pay attention to the 4-hour chart. Finally, let's take a look at the sterling versus US dollar. And well, this is a different, sort of a different picture for this currency pair. Lots of ups and down volatility. Our low price that we saw in trading here today came to this swing area right through here, which I had earmarked again, going back in time all the way to here. As a matter of fact, here, a number of different, there are times when the price did not react correctly to the level, like through here where the market was undecided what it wanted to do, or even through here, or even through here. But the these ceiling levels with the moving averages also in play seem to do a good job of finding that level, and then we moved above the level as well, off to the upside. And trading last week, the price came down to that swing area, found support buyers, and trading here today, the price found support buyers against that level as well before moving to the upside. Now, what we don't see in the sterling versus US dollar is an equivalent move like the euros trading to new highs. The sterling is not. Remember, the Bank of England did cut rates, and so that is somewhat key for it. The pound sterling is trading at 127.73 currently at the moment, so we are back above the 38.2% retracement, and that's going to be a close level of support now for this this pair. We need to get above the 77 level, it looks like, through here, and it looks like we're finding some sellers. And then we need to get above the 200 bar moving average on the 4-hour chart to prove and stay above that level. Admittedly, we did move above it in late Friday, and also in trading here today in the Asian session, the price moved above that 200 bar moving average, but we need to get and stay above that level to increase the bearish bullish bias. So for me, I would probably watch this level down to the 127.54 and to the 38.2% retracement as a support now. If we do break below that level, it would increase the bearish bias. If we do stay above that level, I'll look for the 200 bar moving average of the 4-hour chart to give us some clues. So there you have it. I could only do it in 9 minutes or thereabouts, but it's an important day and some important levels, and we're getting some important moves in some of these currency pairs. So I want to be thorough, and I'll hope that I can set the roadmap for you in your trading today. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.